Ford affirmed its full-year operating guidance for 2024. The motor giant still sees adjusted earnings of $10 billion to $12 billion and adjusted free cash flow between $6 to $7 billion. That is the same forecast provided in early February. Now, for more on the company's future and its plans for the EV market, I'm pleased to say we're joined now by John Lawler. He is Ford's Chief Financial Officer. John, great to see you in person.
Nice to see you as well.
We have to start with the news of the morning, and that is the situation that's unfolding in Baltimore right now. That is after the collapse of the Key Bridge early this morning. And of course, that is the largest U.S. port for handling cars and light trucks. Now, my understanding is that Ford makes most of its vehicles in North America, but does Ford import any cars or components through the port of Baltimore?
Well, first and foremost, our thoughts are with those impacted in the city of Baltimore. It's too early to tell at this point exactly what the impact will be on the business, but through COVID, we've had experience in managing supply chain disruptions, and so we'll have to work that, and we'll find the best solution for those parts that will be impacted.
Well, John, that was my next question, and I know it's very, very early, and this is a rapidly changing situation, but do you have any sense about what impact this could have on the supply chain?
Well, of course, it's a large port with a lot of flow through it, so it's going to have an impact. It's just at this point, we'll have to understand what that means for us specifically. We'll work on the workarounds. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit. So we'll continue to work that, and I would say that we have experience now in understanding supply chain disruptions, and so we'll just put that experience to work and figure out the best solution.
Well, I appreciate that color again on a very developing situation. So let's switch gears here and talk about electric vehicles. Obviously, I'm sure you spend most of your days talking about EV demand specifically. It really hasn't grown to the magnitude that many expected. Of course, Ford has dialed back some of its EV investments. At what point might Ford just revisit the EV strategy and your investment schedule?
Well, I think it's a matter of not if, but when. So EVs are growing, and they're growing at a quick rate. It's just not as fast as the industry had anticipated. So we're adjusting appropriately to that. We're adjusting our capacity to meet that demand. We've seen significant price reductions, so we're working on our business fundamentals to improve those as well. But I think the important thing is EVs are coming, and they will be part of the transition. The other thing that I think is very important for consumers is to understand that hybrids and plug-in hybrids are also a solution that we offer. So we see ourselves as the company of choice. We offer gas vehicles, diesel vehicles, hybrids, plug-in hybrids, and pure EVs. And as a first mover in the market, we think we have a pretty good read on where it's headed, and we're adjusting appropriately.
I definitely want to get to hybrids because I see a lot more of them on the road, and it seems like a lot of people are going to that alternative. But let's talk about cost here. I mean, anecdotally, it feels like most people say EVs cost more. We're in a high inflationary period right now. How are you responding to that? Of course, Bloomberg has reported that you're developing a $25,000 compact EV. Can you share more about that?
Well, about 2 years ago now, we realized that the market, where the sweet spot in the market should be, is in a lower cost EV. And so we started what we call our Skunk Works group, which is a group of really highly qualified EV designers and engineers. We have them out in California, and they're designing a low-cost platform for us so that we can hit what we see as the key market, consumer market for EVs. And that is going to be an approach of having an affordable, low-cost solution for consumers. And so I think as vehicles like that come into market, you'll start to see that demand increase and then the scaling of the EVs increase across the industry.
Well, we're talking about EV demand in the context of that consumer market, but let's talk about the commercial market, for example, because it feels like this drop off in EV demand or, less growth than expected has really been specific to the consumer market. Why do you think that there's more resilience and more sustainable demand when it comes to commercial vehicles?
When you look at commercial customers, one, they need it for their entire fleet compliance. But number two is they have the ability to really understand the total cost of ownership for those EVs. And for part of their duty cycle, it is a lower cost solution. And they've been taking a much more thoughtful approach. They've been buying small numbers of vehicles, testing them out in their fleet understanding that cost of ownership, understanding where they can save money and where it is a better cost solution for their fleet, and then they're moving forward. So we're starting to see more traction in the commercial space, and especially with our transit electric van.
I'm also curious about how the charging infrastructure differs for commercial vehicles versus passenger vehicles, for example. I mean, when you think about buses in a city, for example, they all sleep in the same place, and you can just have a charger there. But I'm curious about how you're thinking about that.
So that's one of the key things with our Ford Pro business, our commercial vehicle business. We offer charging solutions, not only the hardware and setting up the charging in their depots, but also the software to manage the fleet as well in the charging. So it's a real opportunity for us to provide an end-to-end solution, the vehicle, the software, the charging solutions for our commercial customers.
Well, we have to talk about the competitive landscape here on a global scale, because actually one of Ford's top EV executives recently described Chinese EVs as, quote, a colossal strategic threat. How are you combating that? What is Ford's plan here?
Well, make no mistake, it is a significant threat. So it's affordability. They have a low-cost structure. That's where our small EV comes in, as well as that skunk group that is working on that low-cost, very advanced architecture for EVs, where we think we will be able to compete with the Chinese and other low-cost manufacturers.
Well, it's going to be definitely interesting to follow the developments there, but let's get back to hybrids. I'm super interested in this space, and it was interesting, actually, you had Morgan Stanley's Adam Jonas out with a note this month that he sees the, quote, hybrid renaissance as really a direct competitor for that incremental EV buyer. Do you see that within your own lineup? Do you see hybrids taking share from EVs?
We see hybrids as a duty cycle alternative for customers. Electric vehicles duty cycle doesn't work for some, and those that don't want just pure gas vehicles or diesel vehicles, they can go for a hybrid. That's why we've continued to invest in hybrids. We continue to offer hybrids. So you can see it as a bridge to full electric, and we think it's something that consumers are really leaning into because of all of those factors I cited.
Do you have plans to roll out more hybrids?
Yes, we do. Well, we're launching a new Escape. We've just launched a new Escape hybrid. We're launching a Kuga hybrid in Europe. And so we have the #1 selling truck hybrid in the Maverick and the #2 selling truck hybrid in the Ford F-150. So we're #3 in the U.S. in hybrids, and we continue to plan on offering more solutions to our customers.
All right, there you go. I do also want to talk about the relationship with the UAW. You did have the Ford CEO, Jim Farley. He said that the company's once strong relationship with the UAW was hurt by the strike. And with that in mind, what is Ford doing to repair that relationship?
Well, I think it's just about understanding that both of us have similar goals, and that is making Ford Motor Company as strong as we can be, providing the most jobs that we can provide, and producing cars and SUVs, et cetera, for our customers. So we're working with them, collaborating with them, and over time, things will improve. And we're already seeing that. So they've been strong partners of ours, and we're going to continue to work with them. It's in the best interest for both parties.
So an ongoing conversation, an ongoing relationship there. And I'm very aware that I'm talking about the chief financial officer. So I do want to talk about your recent return to investment grade, of course, that credit rating. Layer that on top of higher labor costs and those deeper EV losses. How are you protecting that IG rating?
Well, when you look at our business, we have 3 or 4 very strong businesses. We have Ford Blue, which is our gas and diesel business. We have the EV business, and we have Ford Pro, which is our commercial business, and of course, Ford Credit, the bank. Both Ford Blue and Ford Pro, great profitability, growing business, strong cash flows. Now, E is experiencing losses right now, but we know that we need to bring that business to stand on its own and to be profitable, and we're working towards that. And then, of course, a competitive advantage for us is the bank, where we finance our consumers, and we have incredible customer loyalty there.